Hey everybody, Rob Maurer here, and today, of course, we've got a couple of big items with what's going on with the markets and a new round of Tesla price increases, but we also have quite a few other stories relating to Tesla service, Tesla Supercharging, more on insurance, a little bit of news on the Tesla Semi, and a few other items as well. All right, so looking at the markets, the same old refrain, another tough day today with the Nasdaq finishing down 4.1% and hitting a new 52-week low. Tesla and other high-growth stocks faring worse, Tesla down 8.5% on the day, closing at $639.30. So yet again, we see a swift reversal to the immediate reaction to the Fed meeting. Remember yesterday I had mentioned that this had happened after the last Fed meeting, and again we see that today with the Nasdaq going from up 2.5% yesterday to down 4% today. After the May meeting, the Nasdaq had closed up 3% and then declined 5% the following day. So actually a little bit less volatility this time, but very similar in direction. I'll even pull up my notes here from that May 5th episode. We talked at the time about how CNBC didn't even really attempt to explain that reversal. That's a rarity for them. Yahoo Finance attributed it to a few hours of deep thought, and we're basically seeing the same thing again today. CNBC quoting an investor as saying, quote, "Investor sentiment seems to only be able to focus on one thing at a time. Yesterday, the Fed delivered as people expected. It was combating the consumer price index data that was much higher than people expected and raised concerns about inflation being so aggressive. Investors are now remembering that the counter to this is a slowing of the economy," end quote. So yeah, my take on that, people just looking for reasons to try to explain what's going on, but at the end of the day, it's just a volatile and uncertain market. That volatility is likely to continue until some of these economic indicators become more stabilized and predictable. All right, as far as Tesla specific news goes, the big news here was another round of Tesla price increases late last night in the United States. So if we break out our handy dandy price tracking table, we can see the changes from Tesla's last price update a couple months back in April week 2. So Tesla has increased the price of the long-range Model 3 by $2,000. No change on the Standard or the Performance. For the Model Y, they've increased the long-range version by $3,000 and the Performance by $2,000. And then for the Model S and X, they've increased the base versions by $5,000 and $6,000 respectively and held the plaid pricing. I haven't heard yet if there have been any updates to the Model Y from Texas pricing. If anyone hears anything on that, please pass that along. But looking at this table, we can now see that since the beginning of this year, the Model 3 long range and the Model Y long range have both increased by about $7,000. So both up about 13% and up 20 to 30% from the pricing at the beginning of 2021. So a couple of thoughts on this. Obviously, the big question anytime we get price increases is if it's more of a reflection on demand and Tesla trying to keep their order backlog shorter, or if it's more of a reaction to increases in cost of goods sold. From what Tesla has said on their earnings calls, usually it's elements of both. However, if we look at how Tesla's gross margin has developed, the financial results are more supportive of the idea that it's more of a reflection on strong demand. As we know, Tesla has a huge order backlog, especially on those vehicles where prices were adjusted. That supports the demand theory, but it also brings up the point that Tesla made on the last earnings call that they have to price based on where they expect things to be going from a cost of goods sold perspective for those estimated delivery dates that can be 9 to 12 months out in some cases. That can include things that Tesla has insight into that we don't have, such as negotiation of contracts, but also things that should help cost of goods sold, like increased production and higher efficiency on that production. So Tesla's been raising prices now for 18 months pretty consistently. We've only seen gross margins go up. We've only seen order backlogs, at least here in the United States, go up. And we know Tesla's growing production, which should be a tailwind for cost of goods sold and therefore margins. At the end of the day then, for the business, I view these price increases as a very bullish sign. I think the street is going to continue underestimating what Tesla's margins are going to come in at. We're in a very bearish market right now. And of course, Q2 is full of a lot of outliers and we have to get Berlin and Texas ramped up. But as those things are happening, we're going to continue to see average selling prices increase because these price increases finally start to hit the order book. And you start to, from there, work into a situation where you've got relatively low expectations and exceedingly strong financial results. I think that's the path Tesla is heading towards, but of course, that is contingent upon supply chain being accommodating. That carries a lot of risk, but hopefully as the days go by, we continue to make progress. For example, it would not surprise me at all if Tesla today had record vehicle production for their entire history. We've got Shanghai coming back online at record rates. We hopefully have Fremont producing at record rates. We've got production coming in from Berlin and Austin. Should be pretty much every day going forward that Tesla starts to set new production records again if the supply chain can accommodate. So anyway, it's important to not lose sight of those things. And even though the stock was down 8.5% today, I do think this is positive fundamental news. It's just news that's hitting a market that right now doesn't care about any of those things and is just looking for risk off. The last piece of context that I'll bring in here on the price changes, then we'll move on, is commodity prices. We really haven't seen commodity prices, at least relevant to Tesla, increasing all that much in the last couple of months. Since Tesla's last round of price increases here from Trading Economics, we can see price of nickel, it's declined over the last 2 months. Aluminum's come down over the last 2 months. Steel, come down over the last 2 months. Cobalt the same. Really the only increase I'm seeing here that would be possibly material to Tesla in the last 2 months would be lithium, and that's only been a slight increase. So it's not like there's huge spikes that's causing Tesla to all of a sudden have to raise these prices. Now again, because of the backlog, it's more contingent upon where Tesla expects things to be. And of course, current prices for many of these materials are higher than where they were, a year or 2 years ago. And because Tesla has contracts, they're not buying off the spot price, although the contracts might be a little bit contingent upon those spot prices. There might be a little bit of a lag before those actually hit Tesla's financials. But the point being, because we haven't seen huge increases just in the last few months, those changes have probably already been well accounted for with the many previous rounds of price increases that we have seen from Tesla. So anyway, in my view, very bullish, and I think there is a lot of evidence to back that up, and we'll see over the next few months. All right, next we've got a quick update on the Tesla Semi. We know Tesla has been testing these out with Frito-Lay in Modesto, California. A reader of Teslarati sent them some photos of the Semi testing out at that Frito-Lay facility. Apparently it has been there all week, and the source says that employees at the plant indicated that the Semi could be, quote unquote, coming soon. Now, how much stock do I put in that update? Very little, but we do have something more concrete because Tesla has installed a 4th megacharger on site at this facility, and previously there had only been 3. So there might be some tangible evidence of progress there, or I guess more precisely, preparation for the Tesla Semi. Next, we've got another update today on Tesla insurance. Yesterday, we talked about how Tesla had filed for Tesla insurance in both Florida and Maryland. Today, we have an update also from Teslarati that Tesla has filed to establish an insurance company in New Jersey as well. So if we bring out our map again from yesterday of the distribution of auto registrations in the United States, New Jersey is another 3.4% of the market. So if and when Tesla does add Florida, Maryland, and New Jersey, that would push them up to 36.2% coverage without accounting for California. So rapid expansion here, and there may very well be other states where Tesla has started this process that we're not aware of yet. Speaking of rapid expansion, Tesla today announced the expansion of their supercharging pilot for non-Tesla vehicles for select superchargers in Denmark, Finland, Germany, Luxembourg, and Switzerland. So it seems like Tesla is relatively happy with how that pilot program is going so far. There is now limited coverage in 13 countries in Europe. Next, we've got possibly some interesting news on Tesla interior. We know Franz von Holzhausen is Tesla's senior designer. His wife runs a design company called von Holzhausen. They generally make alternative leather products like handbags, and their company Twitter account tweeted today, quote, "We can't reveal everything yet, but our alternative leather is accelerating like never before. More to come on June 21st. Hashtag sustainable mobility," end quote. The tweet included a very short clip of what appears to be a refreshed Model S interior. You can see the yoke steering wheel in it, and sort of a brown, burnt orange type of color that von Holzhausen is calling caramel. So we don't know. This may not mean anything. This might just be a third-party option that would be replacing a vehicle's interior, but it would seem to be at least a possibility that maybe Tesla would offer this in the design studio. Maybe there's too big of a conflict of interest there, but it does actually look pretty nice from this short clip. I'm not sure how it would fit with Tesla's colorways necessarily, but something kind of interesting to keep an eye on for next week, with them saying more information to come on next Tuesday. All right, next we've got an update on Tesla service. This is coming from Electric. They are saying that they have been told by sources familiar with the matter that Elon Musk has strongly communicated internally that he's unhappy with the state of Tesla's service and that he's making it a top priority. Of course, we have already seen Elon tweet about this, and there were reports coming out of the all hands meeting, I believe last week, that Elon had focused on this. So not any major update there, but they are also reporting that, quote, "It is so much of a priority that Musk has canceled sales and delivery targets for the quarter and pulled employees from those teams to work on service. The result is that sales employees, entry-level workers, or managers who have no training in servicing cars are finding themselves in service centers working on vehicles," end quote. So color me very, very skeptical of this report. Maybe this happened at one store or one region or something like that that wasn't getting a high allocation of cars anyway. Something like that seems plausible, especially if Tesla is really trying to maximize deliveries here in Q2 to make up for production constraints. If this were some sweeping adjustment, it would very much conflict with what we had just had leaked from Elon Musk a few days ago, which was an email titled Production and Delivery asking for employees to, quote unquote, rally hard to recover, end quote. Elon is no stranger to making quick adjustments, but we had already seen Elon tweet about service before this production and delivery email had leaked. And given the context of this quarter, all the challenges with the Bitcoin impairment, restructuring, production shutdowns and constraints, and ramping Berlin and Texas, I don't think they're just going to be like, oh yeah, you guys can just not do deliveries. That's cool. That's just not at all how we have seen Tesla operate historically, and again, does not fit at all with how this email was portraying the situation. It seems much more likely and reasonable that this would be select areas where perhaps there are significant service backlogs and not much inventory allocation here for the last couple of the weeks of the quarter, as Tesla probably tries to prioritize things closer to Fremont to maximize deliveries. So that's my take on it. As for some of these workers being pulled into different areas than they're normally working on, well, that's believable to me. I think that's par for the course at Tesla. You need to be flexible. You need to be adaptable to whatever the circumstances require. All right, last few items for today. As we had mentioned earlier this week, Elon Musk did attend the Twitter all-hands meeting. It's a virtual meeting, and Elon answered some questions that had been asked by Twitter employees the preceding evening. And honestly, there's not really a whole lot coming out of this that I think is all that new that Elon hasn't really expressed before. CNBC is reporting that, quote, according to a source, the majority of the reactions on Twitter's Slack messaging board were negative in nature. Quote, employees expressed that many of their worries about layoffs, remote work, a reduced focus on content moderation and inclusion and diversity measures were confirmed, end quote. But again, really that's just a reaction to Elon saying the things that he has already said. Actually seem to be a little bit softer on remote work than what he has said for Tesla, because Tesla builds cars. Obviously, Twitter does not build hardware, so Elon apparently said that if someone's exceptional at their job, remote work is fine. But he said that he does have a strong bias for working in person. Nothing there that should have been surprising. As far as layoffs, he said that, of course, he wants anyone that is contributing positively to the company to stay at the company, but if you're an underperformer, then why should you be working there? And that seems like a very fair question. So if there's some extreme negative reaction to that, then, well, perhaps that's an indicator that it's not necessarily a high-performance culture. Probably the only other quick thing on that is that Elon said that he doesn't care about being CEO at Twitter. He cares about driving the direction of the product, but doesn't get too hung up on titles. So I guess still TBD on that. All right, speaking of Twitter, there was a report today by The Verge that there's been an open letter to Elon Musk being formulated by some employees within SpaceX. You can go read it in its entirety on The Verge if you would like. But the gist is that some employees are unhappy with Elon's actions and how they reflect on the company. So I think we've talked about this. I've shared my point of view on the topic. I do think Elon could be a little bit more considerate of some of these things. Not really sure a letter will accomplish much in that regard, but we'll see. I don't want to spend too much time on this because who knows how many employees at SpaceX this is. It could literally just be 2. It could be 100. We just don't know. So definitely something to keep an eye on, but something I also don't want to just overemphasize based on one report of. All right, lastly then, we do have a new lawsuit against Elon, SpaceX, and Tesla, claiming damages of $258 billion, alleging that Elon, Tesla, and SpaceX were part of a racketeering scheme for Dogecoin. The plaintiff says that, quote, defendants falsely and deceptively claim that Dogecoin is a legitimate investment when it has no value at all, end quote. All right, well, considering Dogecoin never even had a market cap of $50 billion, I'm not sure how they're coming up with their damages number here, but hey, shoot for the sky. Why not just put it at $1 trillion if we're just going to make up numbers? Well, don't think I need to really spend too much more time on this story, so that will wrap it up for today. As always, thank you for listening. Make sure you're subscribed and signed up for notifications. You can also find me on Twitter at Tesla Podcast, and we'll see you tomorrow for the Friday, June 17th episode of Tesla Daily. Thank you.